All right. Hello, everybody. I am back again with Ryan Detrick of the Carson Group. Ryan is our chief market strategist, and we're lucky enough to have him back on the line again for a Q1 update as to what's going on in these markets. We're coming into an election year. Never a shortage of things to talk about. So, out of the gates, question number one. So, you guys recently put out a 2024 market outlook. For those of us who haven't seen it, I did put out an email kind of pointing towards it. For those who haven't seen it, can you give us kind of a quick synopsis as to what you guys are seeing take shape for this year?
Yeah, Steve, first off, thank you for having me back. I've done multiple of these. They're always a lot of fun. So thank you. The honor is all mine. And if we did these last year, we talked last year, I think Carson Group, our team was one of the few places that we're saying no recession and the stock market's going to do pretty darn good. I mean, a year ago right now, it felt like everyone was bearish. Everyone was talking about a recession. Fortunately, those things didn't happen. So, Steve, we're still optimistic, right? We were very bullish last year. We're still quite bullish right now. We still do not see a recession. We think stocks can gain low double-digit returns and all said and done. Remember, the S&P gained like up over 20% last year. We're not so sure we're going to quite see something like that, but still solid returns. If your average year gains about 9%, we think, again, this year can be a little bit better than average. And we can get into all the weeds and all the details of it, but just keep this real high level and simple. We think productivity is a big key to the whole thing. Our country has not had really strong productivity for a long time, is the honest truth. The last 3 quarters, going to get a little geeky on you guys here, but I'll explain it. Up 3.9% annualized last 3 quarters. You got to go back to the mid-90s, the last time we saw productivity like that. With stronger productivity, that means the Fed can cut. It means wages can stay high. It means inflation can be under control. So just put a bow on that. We think that's the key to this whole thing. And we still see a strong economy. We can get into all that stuff, but productivity to us, the big deal. And it looks like it's going to mean a strong economy this year and probably a strong stock market.
I love it. Well, I have to jump in on that. So, we saw, was it last week or the week before, an inflation report that came out a
Yeah.
little stickier than we kind of thought. The market didn't really love it. So, what happened there?
Yeah, that was the CPI. That's the Consumer Price Index. It did come in a little bit hotter than expected. Now, let's be clear. CPI, we'll just call it inflation from this point forward. Inflation's running still about 3.2%, right? It was way higher this time a year ago. It was like over 9% the summer of 2022. So inflation's coming back. We just hit a little bit of indigestion, I guess we could say. The trend is still there, but to keep this fairly high level, when you look at inflation, it's all about shelter, right? What is shelter? We're like rents, right? The shelter is a huge part of the overall inflation basket that the government looks at. Now, the truth, a lot of people, when it comes to their house, their mortgage is locked in, right? The rates are locked in. They're what they pay for the rents potentially are locked in. So we're not so sure about this. And when we look at the private data, Steve, when we look at things like Apartment List and Zillow, Apartment List year over year rents have been negative 8 months in a row. The government's data says rents are growing at like 5 to 6%. So there's something a little off. We think the government's data is a little lagging here because what happened when we had that CPI number? Yes, big market sell-off. I believe it was the second worst day of the year for the S&P. But the next 2 days, like everyone had time to sleep on it. So, oh, you know what? Shelter makes up 44% of core CPI. It likely is going to start coming back soon enough. And then cooler heads prevailed, and we had a pretty big rally on Wednesday and Thursday after that hotter than expected CPI number.
Awesome. Very interesting. Thank you for that. I want to go back to your outlook for this year. You didn't mention it is an election year, right?
Yeah.
So the media tells us that should be a scary place to be, right? What happens in election years?
Yeah, that's yes. I tend to avoid talking about politics for my career, but you're right. It is an election year. What everyone's going to start to hear, in 2000 and in 2008, those were election years. Very bad things happened. The tech bubble imploded in 2000, financial crisis 2008. But Steve, what I think the listeners need to know and your clients need to know, the last 10 times we had an election year with the president up for re-election, so we'll call that a first-term president. You know what happened? The stock market was higher. It's when you have a lame duck president, 1960, 2000, 2008, some bad things have happened. Now, it's not just that simple. I want to be clear. But at the same time, I wouldn't ignore 10 out of 10. We think this will be 11 out of 11. And here's one more for everybody. If the opposite of pro is con, then the opposite of progress must be Congress. That's a joke you can use all year. And we have a very divided Congress right now, right? The Senate and the House, right? The House is Republicans by the smallest majority, 140 years. Senate is barely the Democrats. So anything that gets through, Steve, is going to take both sides of the aisle. That's actually a good thing. And we think when this election's all said and done, it's still going to be pretty divided. So, of course, who's in the White House matters. But the makeup of Congress, if it's still divided, that could be what matters, because the last 13 years, we've had a divided Congress. The S&P has been higher. A big blue wave, a big red wave. Market doesn't always like too much power. They like checks and balances. And we still think we're going to be pretty divided when November is all said and done. So final comment on election years. Usually the first half of election year is not all that great. Once you get closer to the end of the year and the indecision of that election out of the way, you tend to see that upward bias. We still think stocks will gain, like I said, between low double digits. A lot of that gain might honestly happen in the last couple months of the year, kind of like what we saw last year with the big year-end rally.
Beautiful. I love it. So last question, what are some things we should be keeping our eye on, maybe one or two high level things that, going into Q2 and into this summer that, could definitely play a part in how the market starts to take shape before we get to that kind of year-end rally that, quite possibly could take shape?
Well, hopefully it's okay if I use the F word. I think your clients can handle it. Now, here's where I'm going with this. The
You've
Fed.
done this
We're going to talk
before.
about there you go. Exactly. We're going to talk about the Fed. So that's okay. Fed policy does matter. We talked about inflation a minute ago. When inflation's higher, that means the Fed might not cut rates. People are expecting the Fed to start to cut rates. So again, if inflation remains high, maybe the Fed doesn't cut. Our base case, the Fed probably starts to cut in May. We probably see 4 cuts. So that's something we're looking at. And again, Mark Twain, history to repeat itself. It often rhymes. In the mid-90s, we saw really strong productivity. We saw a Fed that actually started to cut. We saw strong wage growth. And the big worry is that the Fed cuts rates, inflation just roars its ugly head back. In the mid-90s, when we had that strong productivity, that wasn't the case. And Steve, I know a lot of your clients probably remember the mid to late 90s, pretty good time for the economy, wonderful time for investors. We see some big similarities right here and now. So inflation is something we always have to watch. The productivity numbers we have to watch. And then honestly, I'm kind of a markets geek. I love to look at the whole picture, right? We heard about Mag 7 and things, the big 7 tech stocks that have done very, very well. Let's be clear. There are a lot of other groups under the surface, Steve, that are doing well. Like literally last week, financials hit an all-time high, industrials hit an all-time high, transports hit an all-time high. Yes, those big 7 companies matter, but I think investors need to remember there are a lot of other good things happening under the surface with some leadership from those groups, those cyclical groups. If the economy is doing well, those stocks will probably do well. And that's, again, a good thing for the overall lastingness of this bull market. And you really, honestly, everybody, you don't want just 7 stocks going up. You want a lot of participation. And we are seeing that, even though maybe you don't hear that so much on TV when you turn TV on.
Beautiful. Thank you so much, as always, Ryan. Well, we'll definitely check in with you if that's all right in Q2 and get an update, see where we're at.
I look forward to it. And just one final comment. We are in election year. You mentioned it. Early in an election year, so that's the first quarter, historically isn't all that great. So, Steve, just want to be very clear, from now until, let's say, St. Patrick's Day, maybe we have a well-deserved break. The S&P, everyone, was just up 14 out of 15 weeks. We've been pretty spoiled. You might see a color on TV. It's called red. It is normal. It happens sometimes. We just don't get too worked up if you see some red. Just remember how far we've come. Perfectly normal part of a bull market to have a well-deserved break. And we wouldn't be shocked at all if we had one of those, sometime over the next month or two.
That's great. I love that closing line. Well, as always, thank you. We'll definitely check in with you here in a few months and look forward to our time together then.
Appreciate it. Thank you. I look forward to it also.
All right. Be well.